What's up, my mind your money business people? Hope you're having a blessed day. I have been up since 4 a.m. And I posted in the channel about the Fed cuts. But as you can see by the title, it says Dow closes lower, giving up 375 point pop after big Fed rate cut. Now, before the Fed rates, the new Fed rates came out after the Fed meeting, stocks were holding steady. I was in the green. And then when it was announced at 2 p.m. Eastern Standard Time, my stock jumped. It went up by a lot of money. Then an hour later, pew, it went down. But it's not a problem. It's not a problem, people. And I will tell you why. What history has shown about what's happening right now. But let's get into this article. It says stocks closed lower Wednesday in a volatile session after the Fed lowered interest rates in a half-point percentage move. Remember, I was talking about, in previous videos how the Feds are either going to lower the rates by 25 or 50 basis points, which is 0.25% and 0.50%. They were banking on 0.25%, hoping for 0.50. So they went aggressive and they came out at 0.50, which is good because by lowering the interest rates, again, you're allowing businesses to grow. They're able to go out, borrow money to grow its business. And by growing its business, helps increase its stock prices. Also, it allows people to go out and borrow more money for mortgages, car loans. It can also lower the interest rates on your credit card if you have a lot of credit card debt, so on and so forth. And by purchasing products, financing at lower cost, it pumps money into the stock market. Okay, the outsized rate cut was cheered initially by traders, though it did raise concerns the Fed was trying to get ahead of potential economic weakness. These reports came out. The jobs report, I remember, was lower than expected. But, now they're saying, the Fed's maybe doing a bigger rate cut ahead of potential economic weakness. Nonsense. I guarantee you guys were not throwing money into the stock market after the Fed rate cut. Again, it's the traders, those big investors, they're just simply pulling out, the way I see it, they're pulling out the profits that they have made. That's all they're doing because new money is about to start coming into the market because the Feds are also going to meet again in November and December. And more than likely, they're going to lower interest rates even more. And history has shown when interest rates go low, stock prices increase in value. Because that's when I got into the stock market for the very first time in 2020 when COVID happened. And stocks plummeted. And then I started getting into the stock market. Someone in my office was telling me about it. I started listening to them. I started doing a little research. I started purchasing stocks. And in the last 4 years, I have made 20% or more on my money that was invested into the stock market. So yeah. All right. It says the Dow Jones Industrial Average slid 103 points or 0.25% at the end of today. The S&P lost 0.29% and closed at 5,618.26 points. The NASDAQ dropped 0.31%. Again, these are not big or major drops. It says here the Fed lowered its oversight lending rate to a range of 4.75 to 5%, from 5.25 to 5.5%. The first rate cut in 4 years, people, as inflation levels ease from levels seen in 2 years. And I'm gonna tell you about what happened the last time rates were cut, right? It said the committee has gained greater confidence that inflation is moving sustainably towards 2% and judges that the risk to achieving its employment and inflation goals are roughly in balance, the central bank said in a statement. Traders in the week leading up to the decision increasingly hoped the central bank would cut by a half point rather than its traditional quarter point move. So it's like if traders were hoping for a bigger cut, 50 basis point, and you got it. So what's the reason why the stock prices or the stock market went down? Again, I see this as those people taking out their profits. There's nothing wrong with the stock market. They're just taking out their profits because a lot of money is about to start being pumped into the market. So the decision to cut a more aggressive 0.50% increment suggests the Fed has gotten comfortable that the downward trend in inflation are sustainable and may now be shifting their focus to avoid causing economic stress by keeping rates too high for too long, said Morningstar Wealth Chief Investment Officer Philip Strail. He's a professional, right? So let's go. Oh, okay. So what did Nvidia do? Like Nvidia got up to like $116, $117 today, and then shortly after the Fed announced their cuts, it dropped $2.22. Now, wow, the volume of stocks that moved from Nvidia today was 301,216,999. That's a lot of money. Those volumes mean stocks that were sold and bought. So let's just do this. 300,216,991, right? Let's just times it by its current price of $113.37. Damn. That's $34 billion. That's $34,148,970,269.67. That's how much money went in and out of Nvidia today. That was not you, people. These were big time traders, day traders, big investment companies taking and selling profits. It was not you. I didn't buy any. I didn't buy the 1 or 2 shares that I can afford, and I know you didn't do it. So the fact that the price of the stock went down is not a major concern to me. SPLG today went down as well. Small little bite of 19 cents. Not major. Nothing to be afraid of. Nothing to be concerned about. It was up yesterday, I think. It was up maybe 13 cents. Or maybe that's what it was after hours. No, after hours it's up 13 cents. What did it close at yesterday? But either way, here nor there. I'm not going to even, get into that. Because I had a phone call with someone yesterday about the stock market. Listen, rather say SPLG is down today. I'm going to even go back to NVIDIA. The year-to-date return on SPLG, that's from January up until now, even the volatility that we experienced in August and the first couple of weeks in September, even today, it's down 19 cents. The year-to-date return on SPLG is 19.06%. 19%. So let's say you had you invested $5,000 into SPLG at in January, and you haven't put any money in it since then, and it's made up to 19%. So you would have made, let me see, what is it, 19.06. You would have made $953 on your money. $953 on that $5,000 investment. That's that 19%. And we're not at the end of the year yet. And the Fed's meeting 2 more times this year. And again, the fact that the stocks have taken a little hit after such major news coming out about the cut doesn't mean anything, because I'm going to share with you before I end this live, because I'm going to have to leave to go to work soon, what happened the last time when the Feds reduced interest rates in 2020. So that's SPLG. FTEC. FTEC took a hit today. It went down $1.01 today. Not bad. The year-to-date return on FTEC is 18.21%. So let's say you put 5,000 in SPLG, you made $953 on that money, and let's say at the top of the year you had another $5,000 in FTEC, and that 18.21%, that's $910. $910 you would have made on that $5,000 investment. Yeah, that's one way to look at it, people. That's how you gotta look at this. Let's go to Apple. Let's go. What about Apple? Let's say you started buying the Apple as an individual stock, right? Well, Apple went up today. It went up $3.90. Where is Apple? Oh, Apple also pays a freaking dividend. Apple. It did show up where I was looking. So let's go here. Bam. 15%. That's major, people. Well, 14.63% on your investment had you invested in Apple. Let's say you had the money to buy the Vanguard VOO S&P 500. It should be about the same, 19%, the same as SPLG. And then also, when I was having a conversation with someone yesterday, when you budget to invest in the stock market, you're investing your money into the stock market for the long term. Unless you're a trader, you want to invest for the short term to get goals and pull your money out. Just know, like, when you're making this money and you're using your online brokerage account and you're taking money out, you will have to pay taxes on that money, because if you're taking the money out, the IRS is going to look at that as income. So you will receive a 1099 from whomever you're investing your money through, because Uncle Sam is going to want you to pay up, buddy. So remember that. Oh, let's look up. I just recently started telling you guys about VTSAX. Like, if you don't want to invest in any single stocks and you want to cover the entire stock market, VTSAX is the way to go, because it covers large cap, which is the S&P 500 companies. It covers small cap companies in the U.S. that are good companies, and mid-sized companies in the U.S. And this stock, VTSAX, has about over 3,600 companies within that index fund, and it is a good fund. And the year-to-date return on VTSAX is 18%. If you are scared and unsure about the stock market, just put your money in VTSAX. It covers the whole entire market. Okay, it says here, like, if you Google, use like my $1 trillion research lab, which is Google. You can Google VTSAX and find out everything you would like to know about it. It said the fund employs an indexing investment approach designed to track the performance of the index, which represents approximately 100% of the investable U.S. stock market, to include large, mid, small, and micro cap stocks. Oh, micro cap. So you cover the whole market. You don't have to worry about, what stock is a good stock? I don't know. I don't have time to do the research. But I hear Wayne talking about this. I heard, Charlie talking about that. I heard Denise saying she was going to do that. VTSAX. And let the experts at Vanguard manage the fund for you. If there's a company not doing well in the large cap companies or the mid-sized cap companies or the small cap companies and the micro cap, whoever the freak they are. You can search it, research it. Um, they will remove those companies out of the fund and index as necessary. And the good thing about VTSAX, it has been in inception. It has been in place since 2001. So for over 20 years, this thing has been around. So let's see. Again, let's go to my research lab here that I use for free. VTSAX. I might have talked about this already. Um, uh, VTSAX, returns. And you can go to the Vanguard again using my research lab. It took me straight to the Vanguard website where you can purchase this thing through Vanguard. You can create an account and set it up through Vanguard, or you can purchase VTSAX via your online brokerage account. But just be aware, you do need a minimum of $3,000 to purchase it. So be aware of that. So, and it tells you right here, year to date, it's up 18.16%. 1 year, the returns have been 26.19%. The 3-year average has been 7.70%, which isn't bad. 15-year average, 15.10%. I mean, no, not 15, but 5 years, right? Because I will say, I think in 2022, things were not good. 2021, 2022. 10-year average on this fund has been 12.31%. So if you've been investing into this thing in 10 years, you've been receiving at least 12.31% when you average it out each year. Since its inception, since November 13th of 2000, 8.43%. So if you had been investing into this fund over the last 20 years, you would have been, you'd be rich. But either way, that's why you have the dollar cost average in, create your budget, decide how much you're planning to invest each year, and do it. Do it, do it, do it, do it. Invest, people. Invest, invest, invest. Invest in assets that increase in value, not depreciating assets like cars and clothes and going on trips, showing off, the new shoes or purse you have, or the latest model car, the trips and the hotel rooms and the planes. Unless you have a business and you're writing it off as a business expense, that's different. That's different. But if you're just someone out there just showboating, make money in your sleep. Invest in the stock market. Create a business so you can have tax write-offs, so on and so forth. So I'm going to end this live here because I have to go to work. So you guys take care. Have a good day. And make sure that you are investing. I'm hoping... Oh! Before I go, I said I was going to tell you something at the end. And here it is. When did the Fed last cut rates and what happened? So the last time the Fed's cut rate was in March of 2020, when the U.S. was in the midst of COVID-19. The country was grappling with rising infection, business and schools closures, and a stock market in free fall. It was the second of the Fed's 2 emergency rate cuts in as many weeks and reduced short-term borrowing costs to near zero. After the last cut that we had in March of 2020, the S&P 500 initially declined like it did today. History oftentimes repeats itself, people. and then started climbing about a week later. It started climbing a week later. I'm not going to read all the article, it's not a whole lot, but it also says at the end of the paragraph the index is up more than 150% from the bottom it reached at the time. So up until this, there's a graph here that shows when the market, when the Feds reduced the rates to damn near zero in March of 2020. It shows the decline. It went down to like a negative 35%, and then it started to rise, like I said, a week later. And then as of September 16th, when this graph was created, it says the market is up 150%. This year I made money. The market started to become volatile the beginning of August up until now. And I think again, I believe that is when you had traders, Wall Street traders, investors, these big money investors, they just started fluctuating the market because they knew this day was coming. Because again, when the rates are low, people invest more money, they buy more things, they have more purchasing power because interest rates are lower, the car rates are going to go down, the mortgage rates are going to go down, businesses are going to be able to borrow money at a lower interest rate to grow their company, to buy the new AI technology. They're going to have to get in line, from people like NVIDIA, Broadcom, now Intel, Planeteer, those companies. Yeah, because that's where the future is taking us. Technology, AI. All right, so I'm going to end this video. You guys take care. Have a good one. Peace.